It's time to focus on seniors with Helping Seniors TV. The television show designed to make you aware of senior issues and needs, as well as to acquaint you with the resources available to help you age in place and with dignity. Now, here's your host, Joe Steckler.
I'm Joe Steckler, and welcome to Helping Seniors, the television arm of Helping Seniors of Brevard County. Our show is designed to provide you with information on how to develop your own aging and care plans. Our topic today is financial advisors. And joining me is Beth Courtney of the Courtney and Braswell Financial Group. Welcome, Beth.
Thank you, Joe.
And before I even ask you my first question, I want to turn right back to my audience, and I'm going to say to you, audience, it's extremely important that those of you that are watching that are 50, 60, 70, and 80, and maybe 90, tell your children and your grandchildren about what Beth and I are going to talk about today. Because as we get older and become a more elder-type community, I'd like to say elder-friendly community, it's going to be more important that we pay attention to what value good financial advisors can bring to our ability to do a better job of planning for our retirement. Is it a good opening?
That's a great opening.
Great opening.
Good advice. Thank you.
I thought you'd like that.
I do.
Financial advisor. What is a financial advisor, Beth? What do you do?
Good question. Financial advisor would be an individual or maybe a team of individuals who actually help individuals, families, nonprofits, for-profit organizations to manage their finances and to be able to, especially for senior population, plan for a great retirement.
Why is it going to be so more important for seniors to be aware of what a financial advisor can do to help them?
It's getting more important than it ever was before. We're kind of getting into that generation with boomers that there really aren't pensions anymore. You know, our grandparents and parents were able to retire on a nice pension and have a fixed amount of income that they would get every month and know that they were safe. And if they had also done some saving, then they might be able to take a trip or that kind of thing. Now it's really up to us as individuals to sort of bake our own cake. And it can be very challenging to do that if you haven't had all the training and all the education that financial advisors go through.
That's a good point. What kind of training do financial advisors receive? What is your background?
Okay. Well, there are different levels. I and most of the folks on my team have what's called a Series 7 securities license and a Series 66. And then we also have Florida insurance, life insurance, long-term care, variable annuity, health insurance licenses.
But you just don't go out and hang a shingle out and say, I'm a financial advisor. No, you don't do that anymore.
No, it takes a tremendous amount of training and education. Not a fun series of tests to pass. Very challenging. Sometimes you have to go at it more than once, but very tough. But there's a good reason for it. You hear about what's going on in the world. You hear about all the different ways that seniors are taken advantage of. And it is the way for basically those regulating agencies to make sure that seniors are protected and that clients are protected.
Let's say in your training, do some of your training plans address the issue of scams?
Oh, very much. Every year,
actually,
we have to do continuing education, talking about scams, talking about money laundering, helping us to actually pick up on issues that our clients might be faced with. I just had a situation with a gal who unfortunately called us just a little bit too late. She had already moved money because her grandson moved money out of her checking account because her grandson was allegedly in jail in Mexico. And that wasn't the case at all. There's a lot out there. So we're trying to be aware. Immediately I knew when I heard what had happened to her, I said, we have to find out if he really is. And we got on the phone with the grandson and he was in Merritt Island.
Well, see, that's what I've never been able to understand, Beth, is that, I've been doing radio and television now. This actually marks my 15th year of doing a weekly radio show about elders.
Mm-hmm.
We have filmed over 400 television shows, and they're archived on our website and on YouTube, and people all over the world can see, and they'll be able to see this show. Mm-hmm. It'll go all over the world, so people will know what Beth Courtney of the Courtney Braswell Financial Group does, why it's important for people to check the credentials of the people that purport themselves to be financial advisors. But that scheme that you just talked about is probably the most popular scam for senior citizens.
It's so heartbreaking, and the frustrating part is, and she's a very intelligent woman, she has a huge heart, and she loves her grandchild. And what happened is basically the people who perpetrate the crime are they are perfect at what they do. They told her exactly what they needed to tell her so that the banker didn't ask, why are you putting $5,000 in an account? Just giving me the account number. She was told to say, this is a loan for a friend. So she went in, having been already brainwashed in that very short amount of 3 phone calls in one day. She went in and did it. It's
Beth, I've always, I'm comfortable doing this. And a little record at our viewing audience, I'm going to say, if you get a phone call talking about your neighbor, your grandmother, your grandfather, your grandson, granddaughter, or child being in jail someplace or being in a hospital, be concerned about it, but think about it. There are so many ways you can check to see, check the validity of that information. And that's what you're saying.
Yeah, I got on the phone immediately. I said, what's your grandson's phone number? Called him, and he answered the phone. And he was 5 minutes from her, and she had already been to the bank and sent money to save him.
So in addition to helping people manage their money, put it in a 401k, put it in, and there's some new things that are happening, and I'd like for you to talk a little bit about that today, but let's just kind of focus on the fact that our population is changing.
It is.
We're going to be an older community. So while we're young, we need to think a little bit more about how we develop our 401k planning, how we buy real estate, and the importance of buying real estate, because I think real estate and good mutual funds probably are the safest investment tool. And perhaps you might be able to discuss this a little bit so people understand what it is that they're getting themselves into. Okay? Okay.
Yeah, first of all, I think, yes, a well-rounded portfolio is hugely important to having a successful retirement. So it could be real estate, it could be investments, it could be a combination thereof, but having what they refer to as diversification is really an important piece. To your point about the fact that you have to sort of start younger now because there isn't a pension and it's really up to you, it's important to get an education and understanding very early on and not come to me for the first time at age 50 or 55, which happens, and then say, gosh, I really like to retire in 10 years. What do I do? That's a really tough time to figure out how to make yourself have a successful retirement. Starting younger and understanding the importance of the time value of money is critical. Dave Ramsey, who teaches Financial Peace University.
I know who he is.
Yes, you do.
I like his shows.
I love his shows. Very good. Yeah. We're debt free, right? He talks about 2 brothers, a brother who was 19 years old and a brother who was 26 years old. The 19-year-old brother invested $2,000 a year until age 26 and stopped. The 26-year-old brother started at 26 and invested the same amount of money until he retired in his 60s. Which brother ended up with more money?
I want to say the second one.
You would think so, but time value of money, the one who started earlier, the value of his money compounded. They both turned out great. One had $1.5 million in the bank, but the younger one that started earlier and stopped had over $2 million. So, moral of the story is, the sooner you start, the better you are. Think about what his outcome would have been if he had continued to contribute the rest of the time.
All the shows I've done with financial advisors and stuff, I've done for 9 years. I never had an example put the way you just did that. And I trust you for it to be right. But You also have circumstances. I remember when I'm retired Navy, and I had just moved to Auburn, Alabama to take over as the professor of naval science at Auburn University. And that's why I'm so fond of the Auburn football team.
Really?
Right? I really, really like the Auburn football team. But that was my first chance that I had to really invest. Mm-hmm. And it was because we were using children. And at that time, our house mortgage was 16%.
Oh, right.
A lot of people don't realize
I remember those days.
That we've had different sessions and times in our country where some of these interest rates have been enormous.
Absolutely.
So it limited my wife and I from what we could even force ourselves to put into a savings account. We put some in, but it was when the interest rates started coming down and we realized that we just made an allotment out every month and made that work. But we had good advice, and could we have gotten better? Yes, we could have gotten better advice.
But you had the discipline of consistently contributing.
Yes, I did. We did that.
That's the important thing.
And we were able to do what you talked about, diversification. Mm-hmm. And what really helped us tremendously was back in the 70s, we bought a home in Falls Church, Virginia. Mm-hmm. And it almost quadrupled in value.
Oh, nice.
And so that helped us buy our home here. Mm-hmm. So we didn't end up with a huge mortgage payment, and we realized that one of the best things to do to be debt-free, as Dave Ramsey would say, we paid that mortgage off.
Beautiful.
That was what we could do. We were doing the Dave Ramsey plan without realizing it.
Yeah.
But what are some of the other tools that are now available, Beth, that would help people that want to invest? I don't know how much you all get involved with the reverse mortgages or home equity lines of credit. Do you? When you do work with estate planners?
Right. So we actually work with many professionals. We work with estate planning attorneys. We work with accountants. We work with mortgage companies. So basically, in order to help someone have a very well-rounded portfolio, we need to know all of their parts and pieces. So we actually prepare a financial plan for them. So we look at all of their assets and all of their liabilities. And sometimes it takes a conversation with their mortgage company, or maybe it's time for them to refinance at a lower rate. To your point, you had a very high interest rate mortgage. If someone's been in that scenario for many years and the interest rates have come down in the interim, it might be that it makes sense for them to go back and talk to a mortgage company and find out if they can refinance their mortgage so they have a lower interest rate, making their money work harder for them. Either it results in a lower payment or pays off the mortgage faster. A big focus of our practice is to help people get out of debt. Your money works so much harder for you when it's earning interest than when it's paying interest.
You know, I'm not a financial planner, but at my age, I think you have probably just made the most important point that anybody could think about in financial planning. Do you know what it was?
Get out of debt.
You made the point that you need to continually review your financial plan.
Yep. And
it changes, it can change. Events in the country and the world cause financial planning to change. So therefore, a continual look at your financial plan, I think, is probably one of the smartest things. And that's why you should go to a financial advisor, because they should know what the world markets are doing, what the United States markets are doing, because it all impacts on a local market.
Absolutely. There are a lot of things that we don't necessarily think to look at because we get into a habit, especially because the world is automated. Our finances are automated. We're on auto pay for our car insurance and our life insurance and our health insurance and our mortgage and all of that. So what happens is we don't even notice an increase. So when you look annually at least at what you've got, you're going to start noticing things that you just didn't even really pay attention to. You're also going to have conversations like, what changed this year? Was a new baby born? Did someone move to heaven? Do I need to change my beneficiaries? Some people don't even think about changing a beneficiary, and we've seen a situation where an ex-spouse moved to heaven and the prior spouse the name was still on the beneficiary. So there are some laws now and protections in place to help with that now, but it's just something people don't think about. But when you have an annual review, that's part of the conversation.
I did a recent television show with an estate planning attorney that you know quite well.
Yes.
And that was one of the points he brought up, the need to continually check your beneficiaries on all your documents.
Critical.
It is critical.
And to name a contingent beneficiary. What happens if your spouse is your beneficiary and you move to heaven together? You didn't tell anybody where you want the money to go if you're both gone. If you state a contingent beneficiary, a secondary beneficiary, then you've already told the world where you want those assets to go, even if both of you leave at the same time.
Okay, if you have a couple come in and you find out that the car, the house, and 90% of their estate wealth is in the husband's name, what would you recommend?
Well, every conversation, every situation is unique. There might be some reasons for that, but believe me, we're having a conversation and we're looking at the reasons for why they chose to do what they did. And more importantly, are both parties aware of everything? What we see, probably the biggest challenge we face is we'll meet a widow for the first time who's never had a financial advisor. The husband took care of everything. The wife had absolutely no idea what was going on. Lots of assets in his name. Now he's deceased, so it's much harder to do the transitioning to her name. And there's that emotional piece. So here she is grieving the loss of her husband. It could have been 50 or 60 years. And now she has to deal with financial matters that she's never had to deal with before.
The reason I ask that because we had a recent call to the office where that very thing happened, and a woman had access to nothing.
Exactly.
Because her name, everything was in her husband's name. She couldn't have access to it. And
I was referred to someone who there were 30 accounts all in the husband's name, and he had a stroke. So now he's disabled and she's caring for him, and she has no access to any of that information. And
if she'd have had what in place, what would have prevented that if she'd have had it in place?
A plan, a financial plan.
But I'm thinking about durable power of attorney.
Oh, power of attorney, absolutely.
Yeah, the durable.
But even with the power of attorney, if she knows nothing about the assets, she would have rights to get to it, but she still has to go searching. So having a plan in place where you actually have everything laid out and you know where everything is and who are the advisors on the various accounts makes a huge difference. That open family conversation and maybe even having your adult children engaged is a huge piece of it.
It goes back to those key words, knowledge is power.
It is. It absolutely is.
It really is. And as a financial advisor, how much do you get involved really with estate planning? Do you work with elder law attorneys?
Absolutely.
And who else is part of that financial advice team when you
Our team is generally, we whenever possible, we try to connect with their attorney. Sometimes the meeting happens with the attorney, the accountant, and us, because it's a domino effect. One thing is contingent on the other, and it's just more efficient for everyone to get in the same room together and sort it out. Other times we're just communicating by phone with the client permission to make sure that no one has missed a step, that we have kind of thought through all of the angles. What is the most tax advantageous, which is a huge piece that people miss all the time. Just a consultant with an accountant. People stay away from that because, it's going to cost me money. It can cost them far more in the long run if they didn't have that consultation to begin with. So attorneys, accountants, mortgage bankers, we work with bankers occasionally. If some of their assets need to be dealt with in a different way, and maybe it makes sense to involve the bank, we also work with them. So we have quite the network.
So how, and this, when you, estate planning, you have to be careful who you're talking to.
Mm-hmm.
But how hard sometimes is it to convince, let's say if you're working with a mother and father, that the children need to be made aware of what their wishes are. Isn't this a big problem?
It's among the most important things. I'm in the sandwich generation. So I have kids that they have made it through college now, but they were in college and my parents were aging, and it was very critical. And I'm fortunate as a financial advisor that I understood what I needed to understand. But a lot of adult children, either don't want to engage or they're afraid to talk to their parents about it. And the parents oftentimes will say, I don't want my kids to know what I have. And what they don't understand is it's a huge disservice. Of course, they love their children. They don't realize how difficult it's going to be for the children after they move to heaven if they haven't had those open conversations first. So we encourage that very often. And people might be resistant, but when we finally get them together in the same room, the relief from both sides is incredible. And they'll say, we really didn't want to do this, but we're so glad we did. So glad that we did.
I keep hearing you talk about going to heaven. I like that. I like that. I like that positive
I prefer
thought.
to think about outcomes, especially for our clients. So.
Well, I know your mom and dad, so I know them
you.
quite well, and I know what kind of people they are, so I know you.
Thank you.
But what are some of the mistakes that we make in not informing our seniors or our family members, or what are some of the mistakes that we can make in financial planning as we age, Beth?
Good question. A mechanical mistake that we see pretty often that we have to sort of clean up is maybe a very loving husband and father has accumulated paper certificates, stock certificates over the years. I'm working with a guardianship case right now, and they're literally having to dig through and try to find paper stock certificates. Those that they have found are in dad's name. Dad's deceased now. So now we have to get the names transferred, get the documents transferred. So one really simple thing would be to get them electronic, to not have paper certificates that could maybe never be found. Another thing is the titling of them. So dad may want it only in his name, but he can make designations, whether he works through a trust, whether he deals with it in the will, whether he actually titles it TOD, which is transfer on death to so-and-so. Any of those accounts, most of those accounts should be able to be titled in such a way that you can either avoid probate or limit the hassle related to the probate. And a trust is a great way to deal with it. Yeah. So titling of assets is huge, even bank accounts, because oftentimes someone will move to heaven and the power of attorney may or may not, the power of attorney dies when the person dies. So they may not have access to get to the funds in the checking account. But if it were TOD, transfer on death or payable on death, that person has immediate access. So
as a financial advisor, when you're working with the elder law attorney or the accountant, you're making sure that the medical documents are in place, the power of attorney, there could be a guardianship involved. There could be a lot of things.
Yeah, just even for a standard will, there are 5 or 6 documents that are critical, and great attorneys do a wonderful job of making sure that those are dealt with. So you have your medical power of attorney. If you become incapacitated, you've already said who gets to make decisions for what happens to you in that situation.
And one of the reasons I was so interested in doing this show was because years ago, when I had come into the naval home, I had 550 people, and our average age was 77. In fact, they're younger than I am now. But I had one guy, and I can say his name because he's gone to heaven many years ago. But Mr. Erickson was a gentleman, a true gentleman of the old school. He always wore a white shirt, and he came into my office one day, 90 years old, and he put a paper bag on my desk, and he goes, I said, "What do you got there, Mr. Erickson?" I said, "What do you mean, shh?" I said, "You bring a bag, or are you going to tell me what's in there?" He says, "Look inside." I looked inside that bag. It was full of bank books.
Oh,
bank
my
books.
Gosh.
I said, and there were thousands of dollars in these banks all over the country. And I said, "Mr. Erickson, do you have more of these?"
Oh, no.
He says, "Yes." I said, "Where?" He says, "I've got them hidden." I said, "Mr. Erickson, we just can't do this."
No.
He had one relative, a niece, and she lived in Philadelphia. And I had a naval home in Gulfport, Mississippi. And I called her up, and I said, she says, "Is the leaf all right?" I said, "Your uncle's fine." But I said, "We got a problem. You need to come here."
Definitely.
And she said, "What's the problem?" I said, "Well, he bought me these several bags of bank books." He says, "Oh, my goodness." She said, "He never told me about that." Well, the man had hundreds of thousands of dollars all over the country. Had he passed away without him showing me those books, there was no record anyplace.
Exactly. Those assets
so that's why I'm
important.
Yeah. Financial advisors, I'm sure you get into all kinds of situations.
Oh, we do. And let me say, it is far easier to sort it out while the person is still alive and still has capacity. It's very difficult when someone has lost capacity, meaning they're legally considered to be incapacitated. So they're still alive and we're still trying to help provide for them, but they can't legally make decisions about what to do with everything. It makes it very difficult. Yeah. So the sooner the better, the earlier and the more often the conversations, the better.
But one point we should have made at the beginning of the show was, and we're almost out of time, but we can make one more point. I personally think it's never too late.
No.
And you may not think you have enough to start a financial plan.
Absolutely right.
Both those are erroneous statements.
Great point. People are very intimidated about financial advisors. They think they have to have a certain amount of money or a certain amount of assets, real estate, whatever. That is absolutely not true. Start now, start early, start often. And if it's late, it's never too late. Sit down and have a conversation. Sometimes I meet with people who are 65 and it's the first time they've ever dealt with an advisor and they came in completely at a loss. And just talking through things and figuring out what goes where just is a huge relief. So never too early, never too late, and you have enough.
And an thing you don't want to do is give up on the market.
True.
I think, if you invest, you gotta invest for the long run. Things may change. You may have to take the money out. You may have to spend it. But if you can say, I'm going to do this for the long run, think about what your goal is. What is your objective? And use a financial advisor to get the objective. You got 40 seconds to make your last points.
Thank you. I would again encourage everyone that it's important to get together with family and make sure that you're communicating, even if it's an awkward conversation. Once you've broken the ice, you'll be very relieved that you did. And again, no one has too much or too little to see a financial advisor.
Okay. And I just want to emphasize, Beth, I've enjoyed what you've said today because I think it's good financial advice for our viewers. And this advice that can be used whether you're 20, 30, 40, 70, or 80. And I'm past 80, and I still listen to my financial advisor. Yes, that's true. Thank you, Beth, for being on the show.
Thanks.
Thank you, viewer, for watching. I'm Joe Steckler. Thank you for joining our program today. I'd like to remind you that our senior information line is available to you at 321-473-7770. There you can get help and direction that could be helpful for your specific situation or circumstances. The work of helping seniors is very important, but we can't do it alone. That is why our sponsors here in Brevard County are so important. I'd like to thank our many area sponsors, businesses, and medical providers who support the mission of helping seniors that help us carry the cost of our media efforts. If you'd like to join us either as a business partner or simply donate as an individual, we would welcome your call at 321-473-7770. You are always welcome to visit our website at www.helpingseniorsofbrevard.org. Thanks so much for your help. It does make a difference.